one of the things, Linda, I want to ask you, you said if the network is successful, what things keep you up at night? What are the things about Bitcoin? What are the things about the Bitcoin network that potentially worry you? Is it a failure of a potential, introduction? I mean, that'd be so hard to do with how, the nodes are really the decentralization of it. But what are the things that maybe we don't foresee? Do you think it's a nation state attack? Um, do you think it's the centralization of miners? Because you did say if the network is successful.
I try not to think of in terms of inevitabilities because I think that leads to complacency. Um, and so I always frame things in terms of risk. So the risks that I've outlined before, and I can share here essentially are one would be some sort of bug introduced to the code that causes a problem. Now that's not necessarily unrecoverable. It's happened in the past, and there have been bugs before that have not been exploited. Like they were kind of fixed, and then it became more understood that they existed. And so, but they can lead to unintended chain splits. They can lead to loss in confidence in the kind of the immutability of the protocol if they were to be big enough and catastrophic enough and hard enough to fix. Basically, if enough nodes upgrade to something, kind of the whole point of running a node is that you're self-sovereign. But of course, most people don't comb through every line of code
Mm-hmm.
and confirm there's no bugs. Even if you're a professional, you can still miss. Even the professionals who do that for a living can miss issues. And so if they're then forced to update to something to fix a critical bug, they're essentially kind of losing some degree of their self-sovereignty. So I think that the instance, kind of the severity and frequency of bugs can be a problem, or some sort of degradation that happens over time. If there's kind of like you know problems with updates that are discovered like years later that it's kind of already soaked into the network. Those I think are something to kind of keep in mind for a tail risk. Um, Minor centralization is I think a partial risk, right? It's something I would like to see more and more decentralization of mining. I'd prefer not to see over one country or one kind of alliance of countries have over 50% of hash rate. Um, but that's at least a recoverable risk, right? So if the network does get censored, then there should be fee incentives to entice miners to spin up in other jurisdictions to kind of uncensor that network. And so I think over time, that's not a risk I'm super concerned about, unless the Bitcoin network just kind of stagnates in terms of users and transaction volumes, which is not my base case. Um, I think another risk is if the United States were to ban banks from connecting to crypto exchanges or Bitcoin brokers or just all the different fiat on ramps, if they were to be shut off the United States and other kind of Western nations, kind of like what say Nigeria's done, um, I think that's again it's a survivable thing, but I mean that'd be like a nuclear winter for I think price for a period of time because inflows become instead of a flood of inflows you can get a trickle of inflows through kind of peer-to-peer methods like again they use in Nigeria. Um, the the caveat with that is that if they were to do that, then probably something really bad's happening, right? I mean, it's almost like a signal that if they don't want you to own it, you probably should own it. Most of the countries that end up banning Bitcoin or reducing their bank's ability to kind of let you flow into Bitcoin brokers or crypto exchanges and kind of freely trade, usually it's because their currency is not very strong. Um, and so those are the major kind of risks I think about, essentially bugs, some degree of mining centralization, which can include supply chain centralization. I want to see more diversification in terms of the production of miners as well as the operators of miners. And I do think we still have a window here of nation state attacks that can at least make the lives of Bitcoiners a lot more difficult and damage the fiat price for a long period of time. Because part of what makes Bitcoin attractive is that it goes up, even if it doesn't go up every year, it does grind up over time. And the longer you have periods of stagnant price, the more people can lose interest, and that can very much slow down adoption.
Yeah. And what you said about Nigeria is fascinating. And the Nigeria case is really interesting to me, Lynn, because, you had this infamous report by the United Nations basically making the case we must stop Bitcoin adoption in developing countries. It's a threat to monetary sovereignty. They suggested central bank digital currencies, of which Nigeria launched. It's called the e-naira. The adoption of the e-naira, though, is like 0.5% of the population. Compare that to Bitcoin and other cryptocurrencies. It's up to, I think it was up last metric I saw, it's up to 35% of the youth population, even after the crackdowns. And then why that happened? The reason is because a central bank digital currency doesn't solve the reason as to why people are opting out in the first place, which is inflation and censorship. So and it's interesting because you see this in the countries that are trying to stem the flow the most, which is countries with high inflation. Governments don't want their citizens, running out, whether that's Lebanon, Turkey, Argentina. But people still kind of find a way out of necessity. What worries me is that in the West, that incentive isn't there. People are complacent. People are very happy with the financial rails. But I do see that incentive in developing countries, and that makes me at least more optimistic about the adoption of Bitcoin happening on a much quicker pace.
Yeah, I think global adoption is where it comes from, for the most part. I think that's the optimistic take, right? That basically the way I would phrase it is that there's 180 currencies. There probably shouldn't be. I mean, that's almost a barter system. I mean, I think that that's evidence of how bad the current financial system is. The fact that you have these kind of 180 different local monopolies. The vast majority of those currencies are not saleable outside of their legally enforced monopoly. I mean, in the desk drawer next to me, I have some Egyptian pounds, I have some Norwegian kroner. Even though the krone is a pretty strong currency, if I try to use it around here, yeah, there you go, it's not accepted, right? It's actually really hard to get rid of it. And other than the dollar, maybe the euro, the Swiss franc, a couple others, it's just there's not that many saleable monies. And the way that I've described that before is that for thousands of years, commerce and money moved at the same speed, which was foot, horses, ships, things like that. Even when you had banking systems, those banknotes and those ledgers could only move again at the speed of people, at the speed that people could move, right? But once we invented telecommunication systems in the 1800s and laid those undersea cables in the second half of the 1800s, we now could update global ledgers around the world, but we can't move the base, we can't move gold that quickly, right? And so that necessitated abstraction, centralization, and allowed all this financialization and games to occur. And gold was never, kind of good enough to be a alternative because it can't move around that quickly without abstracting it. And when you can abstract it, then it gives the abstractor the ability to sever that peg, basically to drop that abstraction. And so with Satoshi's invention, for the first time since the invention of telecommunication systems in the 1800s, it reinvented it basically added up the speed of commerce and the speed of money again, right? So we're kind of back in the environment where they move at the same speed. It's just that money caught up to the speed of commerce. And so I think it's going to take time to explore what that means. But one of the things it means is that there's really no longer a reason to have 180 different little local monopoly currencies. Back in the gold era, gold, silver were money, right? And it's like not like these countries had their own completely free floating monies. They might have stamped the money differently. Sometimes there'd be banking and kind of representations of money, but essentially you had a handful of different global monies, or at least all of the fairly advanced civilizations. And we've kind of degraded from that in a way, just because of the order that technology develops. I mean, there's kind of no other way that it can develop. I mean, telecommunication systems are going to happen before something like Bitcoin happens. If you survey 100 alien civilizations, they're going to get telecommunications before they get this like immutable blockchain. It's kind of just path dependence. And so there's going to be this awkward period where, signals and commerce can move faster than money. But now they're trying to fight back. So these local monopolies, they've grown accustomed to this century and a half of having this environment, that kind of affords governments the ability to be the sole issue of money. And now that there's an alternative, it just kind of it's a challenge, right? It's like if you're a horse, if you're in the horse industry and then someone invents the automobile, that's a challenge. And if you're in the business of trying to, you're a government and you're kind of uniquely capable of solving that mismatch, you're able to get the monopoly on money issuance. And now there's a way that doesn't need you. That money can now move as fast as commerce, and kind of, over time takes away your seigniorage or threatens it, starting with the periphery currency, starting with the weakest currencies, the smallest
Mm,
currencies. It doesn't start with the dollar or the pound or the euro or the yen. It starts with, the currency you can't even pronounce, right? It starts with one of those and threatens that one, and then it kind of moves up the chain. And so it's natural that governments are trying to push back. They're saying, okay, here's a central bank digital currency. We're going to restrict cash. We're going to do X, Y, Z. But I view it as kind of a flailing defense of something that its time has, I would say, come to pass. Now, in this early period, Bitcoin's still super volatile. So there still is a use case for things like dollars and dollar stable coins and things like that. But if you do get to a point where Bitcoin is 10 times bigger, 20 times bigger, less volatile, more widely held, more ossified and understood among the general world, that increasingly, it's like, who would want to not hold that and instead want to hold some local, less saleable, you know, monopoly money, essentially.